11 minutes after 8. Thank you so much for staying with us. On the big story, we had the Chief of Police, General Kale Kaihura, on the recent killing of Muslim clerics, partisan politicking by the police, and of course, the future of police, especially when it comes to their welfare. Please go to our Facebook page, Morning at NTV. I'm going to be sampling those comments at the tail end of the show, and the Chief will be getting these and more. You can also watch the full interview on our YouTube channel, NTV Uganda, and of course those watching us live on the air, and of course on Mobi. We thank you so much for staying with us this morning. Jackson Muli, the CEO of ICEA Life Insurance, also joins us. Good morning, Jackson.
Morning, bro.
Good to see you.
You too. Thank you.
Insurance is a very big issue, and you know, you are operating in a market where literally half of the people can't afford it. Why is it important?
Thank you, Brian. I wouldn't say that people cannot afford it. Insurance is affordable. If you look at the income of the people in Uganda and their disposable income, and the amount of premiums that we are charging, that is the price. The price of insurance is called premium. Maybe you forgot the last time I told you about that. It's very minimal, it's very little, and you can't say that people cannot afford. It's affordable. And one of the things that I would want to mention is the importance of insurance is to safeguard your family, yourself and your family. As a breadwinner of a family, you need to think about what if tomorrow you are not there, or today you don't go home. What happens to your house? What happens to your children? What happens to your wife? Are they going to live again in the same capacity of or level of life they have been living when you are there? So the insurance comes in terms of safeguarding that kind of a living style when you are not there in the future, and also safeguard the school of your children. We also have insurance for houses, so your property does not disappear. Your vehicles, your loans that are in the bank, I'm sure you have one. So those, the money that you used to, when you borrow the loan, whatever you bought is not going to be captured by the bank. Now the insurance is going to offset the loan, and your property and your family lives in harmony. Yes.
ICEA has gone through a huge transformation. First tell us about the path that you had, Life Assurance.
Yes. ICEA Group, as the name has been, is a combination of three companies. We have ICEA General Insurance Company, ICEA Life Assurance Company, and ICEA Asset Management Company. So that is what forms the group. ICEA has been in operation in Uganda since October 1999, and since that time it has been operating as a composite company until last year, September 2014, when now we had to split the businesses so that we can focus on the particular line of business that each company is supposed to undertake. And therefore now the ICEA General Insurance Company is the company that is now dealing with non-life insurance. ICEA Life, which I'm heading, is the company that is dealing with the life assurance. You see, there's one is insurance and the other one is assurance. So those are two different terminologies. And then there's the ICEA Assets, which now is focusing on investments and good returns in the market. Yes.
What are you doing as a player in the market to make sure that people take this up? You know, again, I feel like a certain group of people can only do that. For example, if I'm in the corporate world and I'm lucky to be employed, you know, somewhere where they give me health insurance, and those are very few of us. But what are you doing to extend this to the bigger market?
I think from a perspective of the company mission, one of the things that we want to put into a lot of consideration is the power of the people, either internally or externally. We won't rely too much on the customer. Once we look at the customer service, where we are giving the customer satisfaction, then we'll be doing much better than the competition in the market. Now again, we are also focusing on ensuring that the people in the company, the staff themselves are contented with the employer. And that's where now you come and say you want to see what kind of benefits do you have.
Yeah.
I think I would say we are the best paying in the market. And
to your staff.
To the staff. And we have all the best benefits that we have. All the benefits that are available to staff, we offer them. We have extension of when you get to a certain level of in the hierarchy of the company, you can get a car loan, you can get a house loan, you have good pay, you have life cover benefit. In case you are not there, we pay ×5 of your salary, of your annual salary, not even monthly salary, annual salary ×5, which makes 60 months.
That's to your family.
To the family.
Right.
We also have a provident fund where now staff are saving. So as the staff saves, the also company saves. So in a nutshell, then it means whatever you're earning as a salary, over and above that, there's always another 5% that the company puts for you as a saving.
Right.
So those kind of benefits really is a motivator to the staff, so that you have good staff, you maintain good talents, the retention is high, and then you are able to run the business in the long run, in the progressively and in the focus that you want to undertake.
Right.
Yes.
Tell us about some of your products. We'll start with life assurance.
Yes.
What are the products you offer? And the premiums also, because I know people are usually pulled by the premiums.
That's right, Mr. Brian. But I would say let people not be pushed by the premium. I think the most drive of the product that you may want to choose is affordability and the benefits that you are getting from the products. Now, in life assurance, we have a number of products, and we have divided the products into two. There's what we refer to as individual products, where you come as a person individually, purchase a product. And we have what we refer to as group products, where now these are products that are tailored for corporates.
Right.
Now, in the individual products, we have various products. We have the Child Educator to start with. Child Educator is a product that focuses on giving a benefit to your child. So you have a child and you have to do a timely policy term that coincides with when your child is going to maybe start the tertiary education. Now, that product, whether you are there or not, that product is going to run, because it has a benefit we call waiver of premium. Waiver of premium is just a waive premium. If you are not there, then the insurance company pays the premium for your child.
Yeah. Because
that's the intention is to have the child get the best education in the future.
Yeah.
We have the normally known as the endowment policies. Endowment policies are policies that are taken by the life assured just for the benefit of their life. In case the person dies, then a sum assured is paid to the beneficiaries. Now, the good thing with this kind of a product, again, is also a savings, because in the event that you do not, you survive the term that you picked out, then the insurance company will still pay the sum assured at the end of the term. If it was 10 years and the sum assured was 20 million, then the insurance company will pay 20 million plus any accumulated bonuses. Bonuses are like profits that accrue on the policy during the term of the policy. We also have another one called triple payback. It works like the endowment, but this one you do not have to wait for 20 years. For 10 years, for example, if the term is 10 years. Now, most people have come back and said, why would you want to keep my money all the way up to 10 years and pay me after 10 years? During the term of the 10 years, I have other problems that arise. So now
if I want the money?
I want the money. So we tailor the product so that you can access part of that sum assured that you are going to get in 10 years and get it in 3 installments. So after the 3rd year, you can get 20% of the sum assured. After the 6th year, you get another 20%, and then you get a balance at the end of the year. Because some people are saying, I better use the money now when I have the energy and I have maybe other needs. Then you keep the money for me and give me the money when I'm old. I cannot eat well. Now, on the other side of the group product corporates, that's why we have group life cover, where we are giving staff of corporates benefit of that cover. Annual salary ×1, ×2, ×3, all the way to ×6. We also have the last expense cover. We are partnered with one of the leading funeral service provider to give this cover. So what we are doing with the corporates is we give this cover to the corporates. In the event one of their staff is not there, is deceased, then They only need to lift a phone, call the service provider, when the service provider takes care of everything, right from the place of death to the place of burial.
Right.
Now, as we will come and pay the expenses of that.
So I can come and actually, start paying my funeral, for lack of a better word.
Yes. It's very good that you're also prepared and you're aware and you're sure that you will not be there one day.
Right.
The other benefit is the Provident Fund, and the Provident Fund, and I say it is a benefit where you make savings. So you are putting money in, you are not going to access that money until they retire. So you are focusing on that kind of retire. We also have group credits where people are getting loans from the bank. Now, once you get a loan from the bank, as I was saying, whatever use you are going to put into that money, nobody should be bothered to know what you are going to use the money for. And in case you are not there, then you must have invested for your own life and for your own family. Nobody should come again and say, the loan that he took of 30 million, for example, there's a balance of 10. So we need to sell this part of the land and get back our 10. So the insurance is paying the outstanding loan at any time the person is not there. And therefore your family is left happily living and with the property and the investment that you had put in place for them. That's what we refer to as group credit. Now, group mortgage is another kind of a cover that we do. This is typically for houses. You do a purchase of the house from for the financiers, then you start repaying the financier. In case of anything, then insurance will come in and pay the outstanding balance of the mortgage. Now, this mortgage can also be taken individually, so you should not say that you cannot take it yourself. Don't wait for NTV. Come alone and get the biggest loan, maybe 100 million from one of the financiers. We'll give you a policy that covers that loan. And again, the financiers are not agreeing to give these loans without the insurance. Because again, they have been in this kind of running after the people.
The client.
To get, and people are crying, the widow is there now saying, oh, my husband is gone. And you come here, you are scooping back now some of the property.
So you then come in as my collateral.
Exactly, and you pay whatever was outstanding.
One of the things, lastly, I want to ask you, claims payment is always a major challenge in the insurance sector. How does ICEA handle that? Because I was talking to someone who works with another insurance company, and they kind of said, you miss 1 month, you forfeit. I'm like, are you kidding me? Just 1 month. How do you handle that? How is it different from other companies?
I think the issue of claims payment is a notion that the public has put in their heads and in their minds. And I would want to say in this platform that the intention of the insurance companies is to settle claims.
Yeah.
And most of the times what happens is there could be some miscommunication or misconception right from the start of the policy, because the obligation either party is supposed to do. Now, at the start of a policy, for example, in the life policy, we do not say 1 month. I don't know where you got that from. We give a client a period of more than 3 months and above.
Right.
You can skip 1, 2, 3, because that's allowed as a human being to skip those kind of payments. But what we usually say, once 3 months are gone and you have not settled your premiums for the 3 months, we are going to technically lapse the policy. But we notify you
that this is going to happen.
This policy is lapsed. A policy that is lapsed will mean, in the event of anything happening, then you are not on cover. The lapsation, we are lapsing the cover. So you are given time to repay your premiums and get back to the active position of the policy. Now, the communication, and that's why I said affordability is very important, because you will not take to a policy and you say, I'm going to pay 100,000 every month. But you can't afford. Yeah. And maybe whatever business you're doing now, chances are maybe 2 years time, that business might not be there. Yeah. So you are not able to pay the 100,000. Now you start saying, I skip one, I'll pay the other month. You skip, then the policy goes lapse. Yeah, and that's the understanding of a life policy. On the other end, for where we have the general business, which is 1 year, if you take a car sticker, and you are given the premium is 100,000, and then you say, you give a promise, let me pay 50, I'll pay 50 after 1 month. Now you pay 50, but since you have the sticker, you disappear. Now anything will happen 6 months later. what will you do? You come and say, oh, now I recover, you did not pay my premium, you did not pay my claim. And that's where the misconception starts.
Right.
It's actually an issue of your obligation to the customer, pay your premiums, submit your documentation. The obligation of the insurance company is to pay claims.
Make sure.
And that is our intention and our core objective in the business, to pay
Jackson
claims.
Muli.
Yes.
Good to see you.
Thank you, Brian.
CEO, ICEA Life Insurance, please go to Rwenzori Court.
Second floor.
Second floor, yes. And third floor, right?
First floor.
And first floor.
Yes, so we are in Rwenzori first floor, general business. Rwenzori second floor, that's where we have the life business and the assets. We are business.
Right.
Yeah.
Go there and get yourself an insurance cover today. You never know what will happen. I have seen this make like literally miracles. As far as health insurance is concerned, you never know when that huge bill will come in and you can't afford it, but your insurance will get it sorted. So ICEA, of course, will be with us every week to update us on the different products that they have, and continue sending those questions on our Facebook page, Morning at NTV, and also tweet us at Morning at NTV. Now this morning, some of you are celebrating some amazing birthdays. Well, you share it with a man who is a class apart on the guitar. We know him as the guy behind the song Maria, Maria, born in 1947. How did you celebrate your birthday, Jackson?
Just a simple cake and yeah, that's it.
Yeah.
Okay. What do you do?
This is Carlos Santana in Maria, Maria. Take a look.